Digital Gold: The Untold Story of Bitcoin by Nathaniel Popper is one of the most comprehensive books about cryptocurrency, offering a deep dive into the origins, rise, and implications of Bitcoin as a revolutionary financial asset. Unlike purely technical guides, this book tells the human story behind Bitcoin, detailing the motivations, conflicts, and ideologies that shaped its development. It is a story of cypherpunks, libertarians, financiers, criminals, and visionaries who saw Bitcoin not just as a new kind of money, but as a way to challenge the traditional financial system. Popper masterfully narrates how a single anonymous white paper evolved into a trillion-dollar market phenomenon, reshaping how people think about value, trust, and financial sovereignty. Through first-hand interviews and extensive research, the book reveals the struggles, triumphs, and controversies surrounding Bitcoin, making it an essential read for anyone curious about the digital currency revolution. At the heart of Bitcoin's origin lies the mysterious figure of Satoshi Nakamoto. Popper meticulously analyzes Nakamoto's earliest messages, highlighting how he first introduced Bitcoin on cryptographic forms in late 2008. Unlike traditional monetary systems, Bitcoin was designed as a decentralized network, meaning no central authority could control its issuance or transactions. Popper breaks down the technical aspects of Bitcoin's blockchain, a public ledger where every transaction is recorded and verified by miners, ensuring security and transparency. The author discusses how Nakamoto's distrust of banks and governments was evident in his writings. This skepticism was particularly relevant in the wake of the 2008 financial crisis, when governments were bailing out banks with taxpayer money while ordinary citizens faced economic hardship. To emphasize this point, Nakamoto embedded a message in the first Bitcoin block, Genesis block, containing the headline from the Times, "Chancellor on brink of second bailout for banks." This subtle but powerful statement underlined Bitcoin's purpose to offer an alternative financial system independent of government intervention. Popper explores how Nakamoto's ideas resonated with different communities. Libertarians saw Bitcoin as a tool for financial freedom, cypherpunks viewed it as a means to enhance privacy in digital transactions, and technologists were fascinated by its underlying blockchain innovation. Among the first to recognize Bitcoin's potential was Hal Finney, a renowned cryptographer and privacy advocate, who became the first recipient of a Bitcoin transaction from Nakamoto. Finney not only tested and improved Bitcoin's code, but also helped shape the early ideological foundation of the project. However, despite his deep involvement, Nakamoto abruptly disappeared from public view in 2011, passing control of Bitcoin's development to others, including Gavin Andresen. Popper speculates on Nakamoto's possible identity but ultimately concludes that his anonymity is a crucial part of Bitcoin's mythos, reinforcing its decentralized ethos. As Bitcoin began to gain traction, it moved beyond a niche group of cryptographers and libertarians into the broader world of finance and commerce. One of the most iconic moments in Bitcoin history, which Popper describes in vivid detail, is the first real-world Bitcoin transaction on May 22, 2010. On this day, programmer Laszlo Hanyecz bought 2 pizzas for 10,000 BTC, proving that Bitcoin could function as money. This moment is now celebrated annually as Bitcoin Pizza Day, reminding the crypto community of how much Bitcoin's value has changed over time. However, Bitcoin's early years were marked by extreme volatility and security challenges. Many people lost their Bitcoin due to hacking incidents, forgotten passwords, or poor storage practices. Popper details the rise and fall of Mt. Gox, the first major Bitcoin exchange, which initially started as a trading platform for Magic, the Gathering cards, before pivoting to cryptocurrency. Under the leadership of Mark Karpeles, Mt. Gox became the dominant exchange, handling over 70% of all Bitcoin transactions at its peak. However, due to poor security measures and alleged mismanagement, the exchange suffered a massive hack in 2014, losing 850,000 BTC, worth nearly $500 million at the time. This scandal severely damaged Bitcoin's reputation and led to increased scrutiny from regulators. Despite these setbacks, Bitcoin continued to attract investors, including Cameron and Tyler Winklevoss, who saw its potential as early as 2012. The Winklevoss twins, known for their legal battle with Mark Zuckerberg over Facebook, invested millions in Bitcoin, eventually becoming the first Bitcoin billionaires. Their involvement brought mainstream attention to cryptocurrency, helping shift its perception from a speculative novelty to a legitimate financial asset. Popper explores the growing tensions between Bitcoin and traditional financial institutions, highlighting how banks and governments initially dismissed it as a passing fad, but later scrambled to understand and regulate it. The book provides a fascinating look at how figures like former Federal Reserve Chairman Ben Bernanke and IMF Managing Director Christine Lagarde transitioned from skepticism to acknowledging Bitcoin's disruptive potential. One of Bitcoin's most defining characteristics is its fixed supply of 21 million coins, making it immune to inflationary policies that devalue fiat currencies. This aspect of Bitcoin made it particularly attractive to people in countries suffering from economic instability. Popper describes how Bitcoin became a financial lifeline in places like Venezuela and Argentina, where hyperinflation eroded citizens' purchasing power. However, Bitcoin's rise was not without controversy. The book delves into its use on the Silk Road, a darknet marketplace where Bitcoin was used for illicit transactions, including drug sales. Ross Ulbricht, the creator of Silk Road, saw Bitcoin as a tool for individual freedom, but his arrest in 2013 marked the beginning of greater regulatory scrutiny. Another key figure in Bitcoin's early adoption was Charlie Shrem, founder of BitInstant, who helped popularize Bitcoin as a payment method but was later convicted for facilitating illegal transactions. Popper presents these stories not to demonize Bitcoin, but to show its dual nature. While it empowers financial independence, it also challenges law enforcement and raises questions about regulation. One of the book's most compelling sections explores how institutions that once ridiculed Bitcoin eventually embraced it. Major financial players like J.P. Morgan Chase and Goldman Sachs initially dismissed Bitcoin as a bubble, but later invested in blockchain research. Popper details how hedge fund managers like Paul Tudor Jones and MicroStrategy's CEO, Michael Saylor, became vocal advocates of Bitcoin, purchasing billions of dollars worth as a hedge against economic uncertainty. This institutional adoption marked a turning point, legitimizing Bitcoin as a store of value rather than just an experimental digital currency. However, Bitcoin faces significant challenges, including scalability issues and high transaction fees. Popper explains how the Lightning Network, a second-layer solution, aims to make Bitcoin transactions faster and cheaper. He also explores competition from other cryptocurrencies like Ethereum, which offers smart contract functionality that Bitcoin lacks. The book also touches on geopolitical factors, particularly China's dominance in Bitcoin mining before its government cracked down on the industry in 2021, forcing miners to relocate to the US and other countries. In the final chapters, Popper speculates on Bitcoin's future. He outlines two possible paths. Bitcoin could either become a global reserve asset, replacing gold as a hedge against inflation, or it could be overshadowed by more advanced digital currencies. He discusses the potential impact of central bank digital currencies, CBDCs, which some governments are developing as an alternative to decentralized cryptocurrencies. Popper does not take a definitive stance on Bitcoin's ultimate fate, but argues that regardless of what happens, its emergence has already changed the world. By challenging the monopoly of governments over money and introducing the concept of decentralized finance, Bitcoin has sparked a financial revolution that cannot be undone. Whether it remains dominant or is surpassed by new innovations, Bitcoin has reshaped the way people perceive money, trust, and financial autonomy. Bitcoin's journey is not just about technology or finance, it is a story about the shifting balance of power in the digital age. Popper emphasizes that Bitcoin is more than an investment or a speculative asset. It represents a fundamental rethinking of how money can work in a world where trust in governments, banks, and centralized institutions is eroding. As Bitcoin adoption continues to grow, it sparks debates about privacy, financial inclusion, and the role of decentralized systems in global finance. Popper highlights how, despite its volatility and challenges, Bitcoin has already forced traditional institutions to rethink their approach to digital assets, pushing them to innovate or risk being left behind. The book ultimately leaves the reader with a sense of wonder at how an anonymous idea from an internet forum evolved into one of the most powerful financial innovations of the 21st century. Thank you for watching this in-depth review of Digital Gold: The Untold Story of Bitcoin by Nathaniel Popper. If you enjoyed this analysis, please subscribe to the channel, like the video, and leave a comment below with your thoughts. Let us know what other books on cryptocurrency, finance, and technology you'd like us to cover in the future. Share this video with friends who are interested in Bitcoin's history and its impact on the world. See you in the next video.